What's up, millennials? In this video, we're going to take a look at the valuation of a company called Astra. Astra is a rocket launch startup company, and it's going to be acquired by the SPAC that is trading under the ticker symbol HOL. Now, before we start, as always, I have not done extensive research about this company. We're just going to take a look at the valuation of this company according to the SPAC and the company themselves. Also, keep in mind, don't trust me, verify me. I'm not a financial expert. I'm just documenting my journey here, and always check what I am doing. And lastly, if you would like to talk a little bit more about SPACs like this one, please check out nesami.com/discord. It's a free Discord channel for you to join if you leave your name and leave your email address. Before we take a look at the valuation, we're going to take a look at what this company is more or less. Just a very brief introduction. So Astra is a rocket launch company. This company was founded in 2016, and we can see that they already have a few customers. They already have more than 5 customers from the government. It was actually quite funny to see this, 5+ government customers. I mean, if you have 5+ customers, isn't it like 6 or 7 or 8? Why don't you just say 6 or 7 or 8 instead of 5+? Anyways. We can also see that they have over $150+ million in contracted revenue. All right. That's important to take into account, and we can see that they are operating in multiple verticals as well. So you have like broadband communication satellites, Earth observation, and also what they call government applications. I really wonder what those kind of applications are, right? There is no merger date for this SPAC just yet, but they expect to close the merger somewhere in Q2 of this year. So now let's take a look at the pro forma valuation first, right? As almost all SPACs, they start out with a base share price of $10 per share. And we can also see that they are going to have, I believe, 260.5 million shares. They rounded it up to 261 million shares. But I believe they're going to have 260.5 million shares outstanding after the merger. So then we can already take the share price and multiply that by the amount of outstanding shares to arrive at a pro forma market cap of a little bit more than $2.6 billion, right? Well, they also say, okay, we are going to have $482 million in cash on our balance sheet. So that means we can now take that market cap of $2.6 billion and take off the amount of net cash of almost $0.5 billion. And then we arrive at an enterprise value of $2.1 billion, right? So that means that Astra, the company itself, is worth right now, based on a share price of $10 per share, $2.1 billion. However, if we go into trading view, we can see that the current price per share is $19.96. So let's go over here, 19.96. And then we can see that that already has an impact, of course, on the pro forma market cap and the pro forma enterprise value as well. We can see that the pro forma market cap has gone up to $5.2 billion. And if we take off the amount of net cash, we're going to arrive at an enterprise value of a little bit more than $4.7 billion. The next thing we're going to do is to calculate the future enterprise valuation. And one of the methods that we can do so is to take the EBITDA of a certain year and multiply that by a certain EBITDA multiple in this case, right? Okay, so we need 2 things for that. We need the EBITDA of 2025, and we need an EBITDA multiple. Let's first start with that EBITDA itself, okay? So here we can see the financial summary, the expected revenue numbers, expected EBITDA numbers, etc. We can see that in 2021, they're almost not going to have any revenue, so just $4 million in revenue. That's not a lot for this company, of course. 2022, the revenue is going to be 67 million, so a little bit more. But let's actually go to 2025. We can see that in 2025, they expect, and expect is a very important word here, they expect to have revenue of $1.5 billion. So that's one number we can take into our minds. And then we're going to go to their adjusted EBITDA number over here. So in 2021, this year, it's going to be negative 81 million. But if we scroll to 2025, we can see that, again, they expect to have an EBITDA, a positive EBITDA of 694 million. And then the other number we need is the EBITDA multiple. So for that, they are going to look at some of their competitors in the same space, no pun intended. They are looking at companies like Iridium, Orbcomm, Viasat, but also Boeing. Maxar, for example, is a very big one as well, especially right now. And they look at their multiples, their EBITDA multiples, what kind of multiples they are trading at. As you can see up here, the median EBITDA multiple of all these companies is 11.1 for this group of companies. And for these 3 companies, the median is 11.4. So then they say, all right, 11 more or less, right? That sounds fair to us. Let's give ourselves a range of EBITDA multiples from 10x on the low end and 12x on the high end. Okay, so you have a low and a high multiple. All right, so we now have these 2 numbers. We now have that EBITDA of 2025, which was $694 million, right? Which I put in my calculator over here. And we have a low and a high multiple of 10x and 12x. Let's first start with that low multiple. So we have 694 million in EBITDA multiplied by 10 gives you a valuation of $6.9 billion on the low end. As you can see, that's also what I put in my Excel sheet and also what's more or less in the investor presentation. Some rounding issues, of course, here, but it's more or less the same. Okay, let's now do exactly the same thing with the high multiple. So we take the same EBITDA of 2025 and we multiply it by 12. That is going to give you this enterprise value for the high end. So that's $8.3 billion. 8.3 billion, also in the investor presentation and also in my Excel sheet over here. Well, we now have those 2 enterprise valuations. We can now also say, okay, let's just take the average of these 2 numbers. So 6.4, 8.3. The average of these 2 numbers is what we are going to call the midpoint valuation. And in this case, that is going to be $7.6 billion. But that is the future enterprise valuation. We want to know the current enterprise valuation. How do we do that? Well, we take these enterprise valuations and we apply a certain formula. For that formula, we need 2 numbers. First of all, we need a discount rate, which already is present in the investor presentation of 20% discount rate. And we need the amount of years we need to discount it back from the future to the present, right? So we have been looking at EBITDA numbers of 2025. We're now living in 2021. So the difference is 4 years. So that's the second number we're going to use in our formula. Okay, let's first start with the low valuation first of $6.9 billion. The first thing we're going to do is to divide it by 1.2. The 2 here is standing for that discount rate of 20%. We're going to do that to the power of 4, because we need to do that 4 years back from 2025 to 2021. And that is going to give you a current implied enterprise valuation of about $3.3 billion, which is also the number over here in the investor presentation. And if we scroll up a little bit, it's also the number in our Excel sheet. Now let's do exactly the same thing with the high valuation. So we said that the high valuation is going to be $8.328 billion. We're going to divide that as well by 1.2, 20% discount rate, to the power of 4, 4 years back in time. And that is going to give us a valuation of a little bit more than $4 billion. Also in the investor presentation and also in the Excel sheet. And then we can also take the average of these 2 numbers. So we had the 3.3 on the low end, 4 billion on the high end. So the average enterprise value is about $3.7 billion. Just a few more steps and then we're there. So we now have these enterprise valuations, but we want to know the average or the fair price per share rather. How do we do that? First of all, we take that enterprise valuation and we add the amount of net cash again to arrive at the market cap. If we do that for the low valuation, we're going to arrive at a market cap of 3.8 billion. For the midpoint valuation, it's about 4.2 billion. For the high valuation, 4.5 billion. So we now have these market caps, and we can take those market caps, divide them by the amount of outstanding shares to arrive at a fair price per share. So if we do that, then we can see that for the low end, the fair price per share would be $14.70. For the midpoint valuation, $15.98. And for the high valuation, $17.27. So there you go. The midpoint fair price per share for this SPAC, HOL, is $15.98, which would mean that based on the current price per share of almost $20, is actually a little bit overvalued. So if you are looking for a space SPAC, you could maybe take a look as well at NPA or SRAC, because I believe these SPACs are still undervalued. Of course, keep in mind, don't trust me, verify me, I'm just documenting my journey here. I could be completely wrong about this entire calculation. And also take into account that we have been taking a look at assumptions. We've looked at an expected revenue, an expected EBITDA, a certain EBITDA multiple. So if you change one of those numbers, the entire calculation is going to change and your fair price per share is going to change as well. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.